Hey guys, welcome back. In today's video, we are talking about the AMC RSI increasing, the strong buy signals for AMC, the $1,000 bailouts for short, and many more in this video. First, we take a look at this. AMC, the weekly RSI hasn't been this high since before the reverse split. Why are people now buying AMC if it's just a dying company? Where if we take a look at the indicators, we're seeing the RSI increasing. Now, it's not a surprise that the RSI is going up. When you take a look at other indicators such as the OBV as well, we understand that we are seeing the bias increase, and that's why we should also be seeing the RSI going up. We're seeing institutional ownership go up, we're seeing retail ownership staying, and again also improving and going up as well. So we understand that obviously people are buying into AMC, and you can see this somewhat reflecting in the price as we see AMC going kind of from that low of 426 to where we are now at 495, still being rejected from that $5 area when we see it close. But nevertheless, what we do understand is that people are buying in. Now, like we talked about and like we understand, AMC obviously should be at a way higher price, but because of what they are afraid, they don't want to see the price go up, and that's why they're continuously suppressing the price. But a big reason for why people are buying is if we take a look at some of the factors. Press reporting that Americans are pouring into movie theaters this holiday weekend for Moana 2, Wicked, and Gladiator 2. So many appealing movies in theaters, smaller titles too, like Red 1, Concave, and Juro 2, be part of a national phenomenon, catch a flick at AMC. So what we're seeing, and this is what Adam Aaron has said, he's obviously laying out in terms of the perspectives, the projections for AMC and just the whole box office in general. What we have is extremely good movies coming out. They're all movies that are projected to have extremely good box office sales. And of course, that's going to benefit AMC. Like we talked about, AMC is the biggest company in the industry. What AMC has also done is that they allow themselves not only profit from the box office sales, but obviously from other factors such as, of course, beverages, such as, of course, food, and of course, all these other factors as well. And so with this understanding that more and more people, that there's going to be more attendance, that there will be more people watching the movies, that we're going to see the box office go up, these are all indicators that is showing how AMC is going to have another good quarter. It's showing how AMC is going to continuously making more money. And again, we're on that road to that profitability. We're on that road to, of course, reduce all the debt there is for AMC. And that ultimately is what's important for us. One of the biggest reasons for what we're seeing, for why we're seeing these media articles to kind of talk negatives about AMC is, of course, about its debt issue. Now, like we already understand, AMC debt issue isn't something of a major problem. It isn't something that's going to send AMC to bankruptcy within the next year or two. We've seen the restructure, we're seeing how they're paying off the debt, but the reason why people continuously focusing on that's because that's the only thing they can have to obviously talk about. And so when we do have the ability to pay off all these debt and get rid of that one factor, obviously they can't talk about that anymore. Now they probably will try and find something else to talk about, but it allows us to understand how well AMC is operating, and the very fact that AMC is not going to be facing any financial pressure, is not going to face the probability of bankruptcy, that itself is important. And you can also see here, investing.com triggered a strong buy for AMC on every time frames except weekly. So the price should hit weekly resistances but not break them. Regarding the analysis, we can see the weekly resistance at $24 for the 100 MA, $115 for the 200 MA, and obviously on investing.com. So like we talked about, we're seeing people buying. We first looked off at the RSI showing that, of course, people are buying in. We're going slowly towards that overbought territory. We're not near, we're just going towards it. What we also have is the fundamentals of AMC to project it doing very well, and we also have strong buy signals coming out for AMC, and you can see where the price targets are at. $24 and $115 respectively from the 100 and 200 MA, and that itself should already show you the confidence people have. Again, you're going to be seeing all of these articles that are saying you shouldn't buy AMC, that are saying AMC is going to go bankrupt, that you should look away, and that you should invest in the movie industry, but you shouldn't invest in AMC. And what you will see on the complete opposite is that whilst these media articles are telling you to do this, the institutions are actually all buying in. And you can again see it from investing.com as well. Like we said, there are so many signals right now that are showing people are buying into AMC. As always, none of this is financial advice, so do take us a grain of salt. Make sure to do your own due diligence and research. But when you understand, again, in terms of what's happening with the shorts and why they're buying into AMC, why we're seeing institutions buying into AMC, is because they understand that shorts can't keep this up for any longer. Firstly, what we're seeing is the reverse repo. We're seeing the reverse repo at $148 billion. You can still see we're still kind of stagnating around this area. But like you said, the reverse repo is essentially a ticking clock. When we see the reverse repo go to zero, what we're going to be seeing is the liquidity that these short sellers once had will obviously fade to zero. And again, it's going to cause the illiquidity problems. And the reason why this is important is because illiquidity correlates to many factors. And one of the biggest factors is how much margin they can gain access to. So if we see that they have a problem with their liquidity, we're going to be seeing them having a problem with their margin, with their collateral, and that itself is what's going to trigger the squeeze. And so as we see the reverse repo going down, what we are seeing is the weaknesses for the short sellers. And again, we can look at it as kind of a ticking clock in terms of understanding, are we getting closer and closer? Like I said, reverse repo going to zero isn't the final trigger, but it is a massive, massive factor, because when the reverse repo first shot up to $2 trillion, is exactly when the AMC and GME situation started. So they used a hell of a lot of reverse repo of the money that was in there to obviously create synthetics and suppress AMC. And so if we were to see the reverse repo go to zero, you can obviously understand how that's going to turn out for them. Now, another thing, might short selling lenders who know they effed up be able to negotiate a prospective $1,000 plus bailout per share with AMC? Just asking the question, that's all. My figure is still 6 figures for the record, still unlikely to sell even at that. So one of the things that we obviously have to understand is that when we get to that situation, when the reverse repo is zero, when all of their collaterals have gone to zero, when they have no liquidity, they have getting margin called, they are likely to obviously trying to negotiate something with the share of AMC. And again, will they try to negotiate for $1,000, or of course for other people even higher? Because we got to understand, they've created billions and billions of synthetic shares over these years. There may be some people who are willing to be selling their shares for $1,000, but there are also people who are only willing to sell their shares for $10,000, for $100,000. And to understand in terms of this is that even if they were to buy up everyone, or at least a large majority, they still have a lot of synthetics that are still there. And again, I don't think that even 10% will be willing to sell their shares for anything less than $1,000. And I do think a large majority at least want to sell their shares at $10,000 and plus. Again, this is going off of data that we've seen in the past before, but you can obviously understand is that what power we're going to have over them when this whole situation erupts. And so you can also see this. 100% true. One of the reasons they attack and still attack AMC is because they want to own it. They have been shorting the hell of the stock since 2017 and have too much dollars invested in it to stop now. When AMC goes profitable, they lose a shit ton of dollars. So this is what we talked about. Media is telling you you shouldn't be buying AMC, yet institutions are buying into AMC. What you're also seeing is how some short sellers are buying into AMC right now. And that's because they understand what potential AMC has. But more importantly is how much money they've put into this play. Remember, to create billions of synthetics, they've used billions of dollars. And that's how much they've put into this. Now, when AMC squeezes, they're not only going to lose the billions of dollars that they've put in, but it's very likely to be 10 times, 100 times, or even 1,000 times the amount of money they put in when the price obviously explodes up. And that's what they're worried about. And that's why they continuously attack AMC. That's why anytime, and you can see this, even if AMC were to do one small mistake, you're going to be seeing 5, 6, 7, 8 articles talking about that one small mistake. And we've seen this happen all the time for AMC because they want to give the incentive. They want to make people have the sentiment of not buying any AMC shares, of if you own AMC shares, you should sell. If you want to buy AMC shares, you shouldn't. And that's the sentiment they obviously want to give out, because they just don't want AMC to go up, because they can't afford to have AMC to go up. And that's why we see these negative articles. And you can also see this. What's up with this APR spiked to 4,613% back in May when the roaring kitty showed up in GME and AMC volume spiked. So you can obviously understand, at times of volatility, they are extremely scared. Why is it that every time we see something volatile with the price of AMC, we're suddenly seeing everything, cost to borrow, we're seeing these APR, we're just seeing these crazy numbers and data's being thrown everywhere because they are still involved in this play. And every time it goes up, they're extremely worried and need to suppress it. And that itself is proof that they are obviously still shorting. And you guys, thanks for watching. I'll catch you guys next time.